Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, October 30th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the chart. Let's take a look at the big picture, work our way into the day itself. Last Friday, Thursday, Friday, yet again testing this band of long-term support, channel support, formerly channel resistance until the breakout last May. The buy signal above this formation, I still see technically as one that's able to, I still think it indicates longer-term strength. I still think we should anticipate the upper 180s over the next month or two, and this 230.13 long-term channel top, I still see as a viable objective by this point next year or sooner. That sooner would present itself with a settlement over the coming weeks above the 187.38 descending channel top. I'll just call it the upper 180s. Able to contain buying on a monthly basis. We could fall off again from here, and if settled above, should present, I would say a sustained rally, not altogether different than we saw from the January low to that more recent, what is that, a July high. I think we could see another one of those if we close above 187.38 in the coming weeks. So that is the big picture. And inversely, if we close below 165.57 by the required 1% margin at the end of the week, this is a weekly chart after all, and why I like the end of the week is because Fridays have a degree of sort of closure and finality to them. You can get intra-week sell signals below 165.57, even by the required 1% margin, only to see a Friday rally, the market push back into or above this zone, and it's a no-go in a long-term sell signal. But if that sell signal does present on a Friday, then this is what I'm looking for. 132.39 over the following 3 to 5 months, let's just say by the end of Q1, we could fall into the low 130s, but not expecting this unless we close the week below 165.57 by the 1% margin, 163.91 or lower. So that covers the big picture. Let's jump into, I'll show you, we've got the 165.57 to 166.99 region still able to contain selling through the rest of the year, and for the day and for the week. And this is what the daily chart looks like right now. So I've got 169.15, steeply descending channel top that covers the last few weeks of activity. And it has been the sell-off for the last few weeks. It basically encompasses that time frame. Able to contain session strength. So I'm talking to day traders right now. 169.15 is your short sell zone. You might be long, actually, maybe not, from last Thursday, Friday, as we dipped back into this long-term support area. 3 to 5 day swing traders may be bottom picking this area. I'm not saying you should take profits at 169.15, but maybe not a bad idea. And because we can fall right back into this zone below 169.15, we could fill this wedge out for the next day or two, testing 169.15, falling back into the 165, 166 handle within the day, Tuesday, Wednesday-ish. Now, if we happen to push through, the 169.15 level, and I thought I had a chart. Yeah, I do. Here it is. 171.37, the high of the low. Thursday was the move low. It's the lowest we'd been price-wise since the July high, And, it is a hesitation point. It's also a secondary buy signal with settlement above. So, yes, closing above 169.15, especially for those of you who were bottom picking last week, this significant zone of support between 165.57 and 166.99. A sigh of relief if we close above 169.15, because I do think if we close today above 169.15, this could be within 3 to 5 days. It could spill into next week. 175.89, I'm going to say a 1 to 2 week target. And it may be more like 3 to 5 days with a spike in volatility from Friday. Friday was a low volatility day, but if the volatility that we saw last Thursday reemerges, it could be by the end of the week, but I'm going to say by the end of next week. Let's put it this way. Holding above 165.57 to 166.99, that long-term band of channel support, will keep 175.89 in reach as a 1 to 2 week target. And if we close today above 169.15, let's just call it by the end of next week or sooner. 175.89, a new descending 1/3 speed line, able to contain weekly buying pressures. And from there, we could fall off again. So this is kind of what I would call our 2 to 3 week, 3 to 5 week time horizon. You may be long already in the 165.57 to 166.99 region, or you may be still buying that area if given the opportunity in anticipation of 175.89 over the next 1 to 2 weeks. 175.89 could contain buying not only on a weekly basis, but we could fall off again from here back into the mid 160s within a couple of weeks of testing 175.89. And finally, it would be a settlement above 175.89 that I think marks a good November low. By that point in time, we will be in the month of November, and I would see over the following 2 to 3 weeks pushing into this significant zone of long-term resistance. Now, as I mentioned earlier, holding above this 165.57 to 166.99 region maintains this upper 180s, 187.07 on the daily chart as a 1 to 2 month target. I'd mentioned that at the start, that holding above 165.57 to 166.99 will keep 187.38 in reach over the next month or two. And as I said here a moment ago, it would be a settlement above 175.89 that should narrow that to within probably 2 to 3 weeks. And that is kind of the big picture dynamic. So 169.15, I'll let you play it as you see it. If you're an aggressive day trader, a great level. If you're a 3 to 5 day swing trader, I'm not crazy about selling 169.15. I may have mentioned that. I may have started mentioning that at the top of this video, but as I look at this chart, I really think 3 to 5 day swing traders should be bottom picking 165.57 to 166.99. 169.15 is great for day traders, but if we close above it, 3 to 5 day swing traders should already be long from last Thursday, Friday, testing this long-term support. And if we close above 169.15, we may be only 3 to 5 days away from reaching 175.89. So I think I've kind of fleshed that out pretty well. If we close today below 165.57, and let's go to the proper daily chart. It's this one here. If we close today below 165.57, that should be by a 1% margin, but that really comes into play later in the week. Let me just say that if we close below 165.57, or actually, I might back up a little bit. Geez, I'm backing up a lot here today. We could get overnight weakness in the futures markets. We could actually open today below 165.57. And if we'd open today below 165.57, break or open today below 165.57, 162.10 is in reach today, a long-term rising 2/3 speed line. But if we close today below 165.57, you should be ready for a downdraft, a secondary downdraft to 157.90 that can contain weekly selling pressures. So 3 to 5 day swing traders, are reversing. Going short below 165.57. We should get a decent intraday bounce at 162.10. We might even bottom out here for the day. But if we close today below 165.57 on Monday, you should allow for 157.90 by the end of the week. And of course, under that scenario, we probably will close Friday below this 165.57 level by the required 1% margin. And if that does occur, no good reason to be long Apple as we move through the rest of the year and into the first quarter. 132.39 once again becomes a 3 to 5 month objective. If we settle the week Friday below 165.57 by the required 1% margin. But during the week, I'll bring you back to this chart. We could conceivably, with a spike in volatility, test 157.90 perhaps midweek, only to come roaring back later in the week into the mid 160s. I think that scenario is not likely. I do think that if we wind up testing 157.90 this week, it is just sort of waiting for Friday to then tip its hand. Would be likely, I think, closing then below the 165.57 formation. So if we close today below 165.57, I will present 157.90 as a 3 to 5 day perhaps scenario. But just so you know, if you're bottom picking the mid 160s, we might bottom out for the week at 162.90. This could be your classic head fake, all right? So I'm just kind of putting it out there that we've closed below 165.57, that long-term channel top that I've been showing a lot. We could test 162.90, bottom out here for the week itself. I just have it as an intraday support level, but it is a long-term 2/3 speed line. So we could bottom out here for the week, perhaps, rally back to close the week Friday, back above this 165.57 and 166.99 region, and then we continue higher as we move into later November. So just be careful with this is the scenario that I think is one that should be respected. We could test 162.90 and still close the week above 165.57. So, there's no way for me to really flesh that out any better than what I already have. Back to the upside, closing today above 169.15 after having tested the mid 160s late last week, presents a buy signal as we move into later week, 175.89 in reach over the following 3 to 5 days. I'm going to leave it at that. 10.5 minutes. That's a long time for Monday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. Be back tomorrow with Tuesday's Apple. You have a great day.